Hi, good morning to everyone. Yeah, this is Chartered Accountant Sunil Kumar Gaud. So we are part of Global FinTechs. So I'm almost having 20 years experience in US taxation, and I worked for multiple companies, especially in Shell Oil company, where I have migrated their global taxation. So currently, just I am the part of the global fintechs team. So today we are going to present something about some consequential provisions on non-reporting of US taxation. Yeah,
Okay.
yeah.
And Mahesh Garu, you also please just give a small intro and we can start.
Mahesh, are you there? Yeah, yeah,
Yeah. Hi all, this is Maheshwara. So I'm a chartered accountant, qualified in 2006. I worked in S&P Global as, it is a rating agency. I worked around 10 years. From 2015 onwards, I'm in practice. I'm in core practice of India. So mainly the tax compliance and also finance and startup related and also planning, tax planning related and all. So, and also I have experience in UK taxation because we are teaching UK taxation also. This is brief about my profile.
Okay, that's good. Navina Garu is available and Mahesh Garu?
I think she's on running actually. She went to Sora.
Okay, so let's then we can start.
I will introduce Navina also. Listen.
Okay, yeah, please.
Yeah, good.
Yeah, Navina Bandlamudi. She is a qualified chartered accountant. She is my wife and also she is ACCA member. That means that in UK it is equivalent to CA. She is the ranker, all India, all world ranker in UK taxation. She is working in Godrej Agrovet as CFO now, so main role. So she has exposure in mainly finance, consolidation, and also in all aspects. But major concentration is only UK taxation.
Okay.
That is the about another one.
Got it. Yeah, good. Okay,
Yeah.
let's start. Sunil Garu. And myself, I'm the moderator for this webinar. Yeah, we can start with Sunil Garu about US taxation and global consequences of not reporting the income. Please go ahead, Sunil Garu.
Yeah. Hi, everyone. Okay. So let me first why I opt for this topic. So generally what happens, everyone wants to save their taxes. Everybody expects this kind of things whenever they go for some kind of seminar. But directly or indirectly, suppose if you are not reporting something properly or precisely, then what happens? There would be so many penalties would be there. The penalties also, there is a huge penalties. Especially IRS will levy almost if you're non-filing of 5471 and some other disclosed information, PFIC investments, HEB or FODCA, there were some huge penalties, sometimes 25K. See, mostly people, they think about how to save the taxes, how to get the credit this way, but they never think of in this way. See, saving of penalties, avoiding of penalties from the IRS, this is the more important area. Suppose if you are more concerned about $2,000 or $5K, once IRS levy 25K penalty, there is a huge financial cringe for every assessee. So that is where we would like to more emphasis on this topic to give awareness to everyone. What are the kind of IRS flag items in this scenario? When IRS will impose, when it IRS will levy penalties for non-reporting of this disclosed information. We would like to go through this one. So we'll give you means 15 minutes for your, conversation, interactive session. We'll try to complete. You can note down your all your queries, all your questions. So after the session, we'll try to address all your queries if the time permits. Or else, if time does not permit, then we can individually just you can email, drop all your queries. We'll reply for your all. Okay,
Yeah,
go to
that-
second slide.
Yeah.
Perfect. Yeah, now we can see. Yeah. See, so it's a what is meant by global income reporting, especially. This is a very important thing. See, generally what happens, people, I think, whoever resides in USA, they do have income, worldwide income. From various countries. Some, it is a two kinds of incomes. They do have a passive income as well as a active
We are
income.
not able to hear. I think you are on mute.
Yeah,
Oh.
it is audible. It is audible.
I can hear. I think everybody
Ah.
can hear probably.
Yeah.
Oh, okay.
Please go ahead, Sunil.
Yeah. So, I think people have, whoever the US citizen or legal residents of USA, they do have income worldwide from various countries, especially people who migrated from India to USA or from other countries. They do have assets outside the USA. They do have land and building. They do have some kind of fixed deposits, foreign accounts. They do have some mutual funds. So sometimes what they believe, since this income accrued arised out of USA, so not reportable to the in their 1040 return, their individual return. This is the preconceived notion. Everybody believes that, but that is not what IRS is. They should report in their 1040 return their worldwide income. That includes either it could be their interest income, dividend income, capital gain, whatever it may be. And even if they do have sometimes they do have a holding in the foreign companies, they do invest some amounts. It generates some revenue. So they need to report all this interest, dividend, even if they can get any salaries, wages from outside India. In such a scenario also, they have to report in their 1040 return. This is the main compliance. So people believe it's a small amount, does not require, they feel. But you still need to report in your 1040 return to avoid penalties from the IRS. Okay, can you go to second slide? Yeah, Suresh, yeah. Okay, let me talk about this EBOR concept. So this EBOR is one of the reporting. This is the part of the, this is not reporting to the IRS, EBOR actually. So this EBOR reporting is a part of US Treasury Department. It is a FinCEN department. So where we are reporting all your custodian accounts, all your foreign accounts, foreign deposit account, especially your cash kind of things. Your fixed deposit, your saving account, NRE account, whatever if the amount exceeds 10,000 at any point of time during the year, in aggregate, if you have two, three accounts or four accounts, in aggregate, we need to see club the both accounts, all deposits accounts. If at any time during the value, peak value, if it exceeds the 10,000 in aggregate, then we have to report all your foreign accounts in the FinCEN form. So whether we need to exclusion method, when it is excluded foreign income from US taxes, if some criteria are met, if it is below 10,000 value, then it is not required. Even if your income is, again, there were some other concepts from 2555, where completely you are in, if the income is, if you are resident of, if in during that period, if you are falls under other resident, other than US resident, then in such cases also it does not required. See why this concept, all this global income reporting or why we need to report all these things? Because to avoid a double taxation, especially. Because if you have an income from other countries, if any income accrued arise outside USA, you need to pay taxes for that income earned in that country. As you are going to report the same income again in USA, thereby you are going to pay double taxation. But this, we have a concept of foreign tax credit. This is why the tax treaty help you. Double taxation TTA will help you to claim that foreign tax credit. In upcoming slides, we will talk about this foreign tax credit concept also.
So
Can you go
one
to
question,
next?
Sunil Garu, one question.
Yeah,
The
yeah,
$10,000 is around 8.5 or 8.6 lakhs throughout the year, correct? Not one time, like multiple small transactions aggregated throughout the year. Is that correct?
No, it is the balance at any time. If you see the bank statement, you
Mhm.
need to say not debit and credit transaction. You see the bank balance. You have a daily bank balance.
Okay.
At any time, you need to see the bank balance. Bank balance, whether it exceeded $8,500. You need to see, suppose in one bank we have a $4,000. Just I'm converting rupees into dollar. In
Okay.
another bank, you could have a balance. Bank balance maybe 4,500 like that. If
Mhm.
you take that bank balance aggregate, if it exceeds 8,500, then I mean 10,000, you need to report that one.
Yeah, not 8,500, 10,000. 8,500,
10,000.
8.5 lakhs around.
Oh, yeah, you can take it
Okay.
like 50,000 rupees. You can convert. You can take average rate for conversion.
Okay.
What is the average rate during the? We can take from RBI guidelines, which is available on the online. Throughout the year, we can take average rate and we can convert that into
Mhm.
dollars. Yeah.
Okay.
So it is not one value. It is only peak balance during the year. Yeah.
Peak balance. Okay. So
Yeah.
multiple
Yeah.
transactions, like multiple small transactions is okay in that case?
Yeah. Multiple transactions. So not multiple transactions. Only you need to see the bank balance. Transactions in the sense, maybe my transactions could be 1 lakh in one day,
Okay.
maybe 2 lakh in another day. That does not count.
Mhm.
You may have income, you have expenses in your bank statement. Income minus expenses. If you see, you will get a bank balance. You will see the daily bank balance. In your daily bank balance, at any time, for example, if you have one bank account, at any time, assume if you have a one bank account, at any time during the year, do we have a greater than $10,000? I
Okay.
mean, 8 lakh 50,000.
Okay.
Does not mean by transactions.
Got it. Good.
Yeah. Yeah. Go to next slide. Yeah.
Yeah, one more question they mentioned.
Yeah.
So, same with NRE account, does this have to be reported?
Okay. That is a good question, I think.
Yeah.
So there were there were definitely NRE account and NRO account. Generally, NRE account is the part of US only. I mean, if you have a NRE account, means it's almost equivalent to the US account in this case. Whereas NRO account, it is nothing but all. Why NRO account? NRO account and that mainly we need to understand the difference between NRO account and NRE account. NRO account is to park your funds which is generated accrued from the outside USA. That is the main intention. Whereas NRE account is nothing but it is a part of your US bank account mainly. So you need to report all your NRO accounts. NRE accounts, I mean, when it comes to reporting, it is treated as a, but again there is a controversial on this one. But you need to report to only NRO accounts, especially precisely.
Got it. Okay. Let's
Yeah.
move on.
Yeah. Okay. And again, why NRE account? I will tell you again. Because all income which is generated from NRE account, you will get all your interest, everything will be taxable in your 1040. I mean, because being it is they will provide you all Schedule K, they will provide you a 1099 INT form, everything, which whatever interest generated from your NRE account. So that is why by default you will take into the 1040. Whereas in NRO account you won't get such a 1099 form. So that is why we need to report all these accounts in form 893, the form, I mean in your EBBR form. Yeah. Okay. This is another form. This is a very important thing. So this FOTCA is mainly reporting to the IRS, this form 8938. So this is the van. See, you see here the penalties even in EBBR or FOTCA, you see the penalties, how much high, 10,000 penalties. The deadline of this by default, since it is the due date is 15th April. So you need to file all this 8938 or FinCEN form as a part of 1040. So that is why the due date default falls under 15th April, unless you take an extension. In case if you take an by filing 7004, if you go for an extension, then the due date goes to 15th October. So go to next slide, Suresh. We'll see the FOTCA. See, who has to report a what is meant by specified foreign assets, financial assets, and other assets. Here you see the threshold. Here we need to understand very carefully. Filing status. In case your filing status is single or MFJ, MFS, and as the second condition, living in US, living in abroad. You see, 50,000 on last day of the year or 75,000 at any time. Here also very careful. 50,000 on the last day of the year means your December ending. Because your return, US tax return falls as the calendar year. So 50,000, the last day of the balance, not again debit and credit transaction. What is the debited, what is credited? Your bank balance, 50,000. Or they said $75,000 at any time. At any time in the sense during the whole year. If at any time your bank balance exceeded 75K. This condition is only for people who are living in USA and living in abroad. So sometimes what happens, people who they may leave the US and lives in the legal resident, US citizens or the green card holder, GC card holder, they do what happens, they may go back to the India and start gaining their income from there. As a part of worldwide income, still they need to report, still they need to file 1040 return. So once you become, this is very important, so once you become the green card holder, legal resident, you are still lifelong, you need to file a return for 10 in USA. That is the main stringent condition. Even if you earned income in India also, you still need to file 1040 return in USA. Being you became a, even you it is there in your condition also, while you are applying for a GC green card holder. So whoever living in abroad, for them, I think 200K and 300K at any time during the period. This is the difference. Whereas
So
for marriage, yeah.
living abroad is including India, going back to India.
Exactly, anywhere.
Okay.
Back going to, if you are leaving your US and residing there, if you, I mean, sometimes once you become green card holder, sometimes it is a decision. They may choose to go back to leave their own country, but does not escape you from the filing of the 1040. That is a stringent condition. You are obliged to file still your 1040 return. So that is why living abroad means being you are a green card or legal resident, and if you move out of your US, still you are working, you are gaining income even from that respective country. You still need to file applicable tax to this country. So same, yeah.
Please.
And the other, the second condition.
Yeah. Now it's clear.
Yeah. Now it's perfect. Yeah. Okay. If you see, okay, let me, okay. If it is the MFJ return, then you can see there is incremental of the threshold limit. It is 100K in the last day and 150K at any time during the year. So for the people who are living and abroad and filing joint return, I think it is a 400K in the last day. I mean, last day in the sense 31st December. Understood? And 600K at any time. At any time during the period means Jan to December. Always treat it as a calendar year because our 1040 return is based on the calendar reporting, calendar filing. So your Jan to December in your account, aggregate of all your accounts, assets, all assets. So I will let me go to the next slides. I want to explain you emphasis on this foreign financial assets. Identify reportable assets includes your foreign bank accounts, foreign stocks, securities, mutual funds, interest in foreign entities. See, these are very, very important. Interest in foreign entities. I mean, if you have sometimes what happens, you are the director of in a foreign company. You hold some 10% value or 25% value, or you have your own business. You are running on your own business as a sole proprietor. It is a kind of single member. Or you even your trust. Sometimes what happens, some Hindu undivided family. Sometimes what happens, you transfer all your assets to a trust. You have authorization in the trust. So why they transfer all this in India? Why they transfer to the trust means to escape from the taxation, Indian taxation. But in such cases also, if you have any interest in foreign entities, trust or corporation or partnership, then all these all form part of your foreign assets. See, even if you see the penalties also very important. Failure to file 10,000 penalty with additional penalties up to 50K for continued failure. So this is also it is a kind of you are continue to file. I mean, it is a per year filing. So you need to report each year. In case, even also true and fair is if you are not properly filed this one, 40% of penalty for understatement, for concealment of assets. So that is why the true and fair view of information, precise information also very, very important. Otherwise, it leads to huge penalty, significant penalty. Yeah. Can you go to the next slide? Yeah, Suresh. Yeah. Yeah. Okay. Let me talk about so one more thing. The first point which we discussed about FinCEN. Second is the FinCEN means FBAR. Second is FOTCA. So if I report if you see in the second thing I told you, the financial accounts, I mean fixed deposit, all your foreign bank accounts, whatever you reported in in your FBAR, still you need to report in FOTCA also, 8938. I reported in Fin does not mean that I can skip this FBAR, not like that. Still you have obligation. Still there is a liability to report in FBAR. Whatever you reported in your FBAR, you have to report in your FOTCA also, Form 8938. That is very important. Because the reason is your threshold, the foreign assets, the total specified for financial assets means inclusive of your custodian account, all your fixed deposit accounts, your saving accounts, your cash, and all your liquid accounts, your mutual funds are all put together and consolidated. So that is why both compliance are mandatory. Okay. Let me talk about this is one scenario where people are struggling. Sometimes what happens, your your insurance, people what happens, they do have a PF. They when they worked in prior to migrate to USA, they do have so many investments in their own country, India or other countries. They do have their own insurance policies, mutual funds. They do have the land and building. Okay, this is one more important. Form 8938, nowhere I mentioned land and building. Land and building is a fixed asset. So does not comes under the category of the Form 8938. So this is very clear on this one. So when you are when I mentioned the threshold limit to 150K and 600K, whatever the limit I mentioned the previous slide, it is only all your financial assets, other stock holdings, all other mutual funds only. Does not comes the all your your jewelry or your gold ornaments and your land and building does not fall under the 8938. So that is one relaxation. Okay. But one interpretation, I mean, if the asset is generating any income, suppose if you have a land and building, if it generates any income, there is a one controversial, still you need to report. That is one, I think, controversial subject. But in IRS, precisely nowhere mentioned you need to report that one. The land and building has not given under the definition of specified foreign financial asset. Okay, let me come to the tax treatment. So this is where people generally what happens, they get a insurance proceeds from India. So people are this life in this they may get a dividend from the insurance. Sometimes they will get some death benefit, all these things. So what is the tax treatment for this life insurance proceeds? So these are various scenarios. This life insurance proceeds also various scenarios. So one is on the death benefit. If anything received on account of death insured generally, that one is a relaxation. That is not taxable. Even if the life insurance pays interest on the death benefit due to delayed payment, interest portion, that portion is taxable as income only. In case of the sometimes what happens, they may delay to the maturity amount or death benefit, they may get delayed. Due to the delay, they will pay some interest also. Only the interest is subject to taxable. Whereas this life insurance proceeds as a lump sum due to death of the insured person does not taxable in the USA. Again, so anyhow, it is there is some exemption in India Income Tax Act, but we are talking about predominantly on this US taxation. There you can get so we are talking, we will talk about repatriation of these funds again later. In the end, I am going to present about this one, but now only whether it is escape from the taxation or not, just I am emphasizing on this one. Okay. So foreign asset reporting for number. If the life insurance policy has a cash surrender value, it may be considered as a foreign financial asset and must be reported in FBAR. Why? The reason it is also the financial, it is received from the financial institution. The insurance policy and all your banks kind of thing, this one also. That is why it has a value, liquidated value. That is why it should be reported under Form 8938. Yeah. Go to next slide. Yeah. Yeah.
Sunil, you have two questions.
Yeah.
On the
Maybe we can take at the end.
Yeah. Probably. Yeah. Maybe. Yeah. We'll park those questions, Mahesh. At the end, I'll try to answer everything. In case if does not allow, then I can definitely reply for all the queries. Yeah. 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 Okay. Now, proper. Okay. This is where health and medical insurance proceeds. Okay. This is one also not taxable. The reason it's a kind of a reimbursement of expenses. So proceeds from the health and medical insurance policy to reimburse medical expense are not considered as income or not taxable in USA. The reason why it is not an investment policy. It is a kind of a medical health insurance policy. So that is why, since it is not a to take care of your health, and so that is why they are giving this kind of a provision in India. So that is why even in US also, if that health and medical insurance proceeds does not taxable, but we need to ensure. Suppose tomorrow, I think maybe later, if IRS caught this one, since if it is significant amount, why you have not reported? We need to ensure It is a kind of a, I think all your hospital records, reimbursement of medical bills, everything should be keep in proper records. To answer, I think if later if IRS ask any queries, if they send any notices, we can, it act as a adequate evidence. Yeah. Go to next one. Yeah.
Explain how many years we need to maintain?
Probably, I think 8 years is the minimum, but it is better to maintain at least 8 years minimum. Last year, I think even sometimes even IRS ask beyond 10 years also. I think some cases I have seen notice non-filing of 5471, they got a notice, I think around 2010 one, 2010 also.
Like in India, there is no cut of 5 years. Like here, we need to maintain 5 years only. No?
See, one thing, suppose if you escape from a big amount, a significant amount, that I think if you avoided almost 40% tax, it losing revenue now for US department. So they never say, I think, restriction on you need to maintain this one. At any point of time, retrospectively, they can give you notice. Once there is a concealment of income, concealment of assets, if they found, especially this FODCA, EBBAR things, why they are, I think nowadays, one more thing, recently, BOIR filing one is there. People who are owning interest in other countries, if they are any, even in, if they are, suppose if you have LLC, you need to report whether the LLC owner BOIR filing is there. Why they are putting all these controls to know the record? I mean, how it is going on, whether they are transferring cross-border transactions, how it is going on, what happening. So that is the main reasons why they are putting more complaints, more control checks. So at any point of time, does not mean maybe 5 years or 8 years. They may can go beyond 8 years also sometimes. Yeah, go to next one. Yeah. Okay. This is where, because why this is the endowment investment linked insurance policy. The reason why, probably this is an exemption in India. There were some conditions in India. If it does not exceed 3 times of the investment, there were so many conditions were there. It can be escaped from the purview of Indian income tax, but does not here. So if you see, if you see here, this amount, since it is investments, it is investment for things, this is still taxable. These things. The reason why it is taxable means it is a ULIP policy here. ULIP means it is a kind of investment, not kind of insurance or it is a health medical kind of thing. So any income, it is so US government, IRS will treat it as a investment income. So whatever income, whatever amount you paid in, so amount you paid invested minus received, paid minus premium, this they will treat it as the income. So again, this is not a capital gain also. This is the ordinary rate. Your capital gain tax rates at least falls under between 10 to 20%. While ordinary rate means it may higher than the capital gain tax rate. You almost go to sometimes 30% up to 40% are there, the rates. So in this scenario, you have to report as a ordinary income, normal income tax rates. Many people believe that the investment is there. If I still park in NRO account, you have not repatriated this amount. Still, if you park even in NRO account also, as a part of global income reporting on accrual basis, it is still taxable. Even if you're not repatriated, if you're not transferred the funds to the US bank account or NRA account, if still lies this maturity investment in your Indian bank account or I mean in your NRO account also, still we have to, we need to report in your 1040 data, this one. So this is a major, I think, a drawback for people who have ULIP in investment in India. So this is where we need to be properly plan for tax things also. Yeah. Go to the next slide. Yeah, Suresh, yeah. Yeah. So just I gave you, I mean, suppose maturity 100K, premium paid is as a small example. 30K is your capital gain because 100K you invested, total premium is 70K you paid. Again, we will take the conversion because what happens when you pay the premium over a period of years, will pay the premium, not one time. Every year will pay the some amount. So in that respective rate, in the respective year, what is the rate, RB rate? We will take that rate and we will convert to that INR amount or the into the US dollar. That is how the calculation would take place in this case. And it is taxable in the year when the maturity amount received in the year. Yeah. Go back to next slide. Yeah. Okay. So this is again casualty claim. Generally, if you receive insurance payout property damage, example home, sometimes what happens, you could have some home at your outside USA, then you can take, generally it is a mandatory as per India insurance guidelines, you need to take insurance. In such a case, if the amount does not exceed cost basis of the damaged property, then it is not taxable. This condition has to be careful. If it exceeds the damaged property beyond, then the difference amount is taxable. So that is why if any amount received from the damage of your home insurance beyond the cost basis, then the excess amount considered as in this case it is a capital gain. The reason is all your sale of land and building, home, these are all part of the capital assets. So that is why here it is taxable as a capital asset rather than a ordinary income. Yeah. Go to next slide. Yeah.
So is there any chances like is giving insurance claim more than cost? Mostly they will give only our cost.
Yeah, that is a good question. Sometimes what happens, I think maybe if you take 2-3 insurance policies, assume. Yeah, if you're claiming from 2-3 parties, we need to see that scenario also. Generally, it will not exceed. I think you may get less than what are the cost property. Insurance people always try to give as much as they try to reduce it. Yeah. In practically, it is very. Yeah, true. Yeah. Okay. This is all which we discuss reporting. I mean, even if you are not FinCEN form, this is what we discussed initially. Yeah. Can you go to the next slide? Yeah. Okay. These are summary of tax treatment of insurance procedures. Just I gave you some highlight points. Life insurance, not taxable, health and not taxable. If you see what is taxable, what not taxable. And reporting requirement in FBAR and FATCAs I gave, because life insurance is since it is a cash item, you need to report in FBAR and FATCA. But health and medical insurance proceeds not required to be reported. All your endowment, all these things are investment. Yes, you need to reportable in FBAR and FATCA. So property insurance proceeds, these are not reportable for FBAR and FATCA. And when it comes to tax treatment, I gave you what is the tax treatment in there. US also. Interest on life insurance taxable as ordinary dividend, and even property casualty does not taxable. So this is for some insight on FBAR and FATCA. Why I have taken majorly these insurance proceeds means because most of the people approach me for they have got a huge insurance proceeds. It is they are going to pay huge tax on this one. So they should not feel a surprise and at a time once so you need to cautiously plan when you are going to mature these funds in the next 2 years, or then you need to plan your funds as according. So that is why I would like to more elaborate on this topic, insurance proceeds. Yeah, go next one. Yeah. Okay. So this is where I think initially I told you, see this insurance, especially the ULIP, some insurance proceeds, or any PF withdrawals, or any income. If I generate from my outside USA, I mean, I am going to pay taxes in the respective country. So you are going to pay taxes any asset. I mean, if any asset which generates income, for example, rental property generates a rental income. Your bank account generates a interest income. For India, you have NRO account. NRO account generates interest income. And in your rental property, will generate your land and building. You are going to file your return in India, as well as the same income you are going to report in your 1040. Thereby, you are going to pay double taxation. So that is why there is an agreement between every countries. We do have there is an agreement between India and US also. The double taxation avoidance agreement says if any taxes which you paid on your Indian income, outside country income, if you paid any taxes, you will get to that extent as a credit in your in USA. I mean, for example, if you're in India, if the tax if the tax rate you paid almost to 40% tax rate, whereas in USA you are falling under the bracket of 30%. So the only thing is you need to lose the 10% if it is a higher rate in India. If it is a lower rate in USA, and I mean vice versa, you will get the benefit in some cases. I will give you one scenario also. Go to next slide. Maybe I gave you. Okay, if you see, this is the one example. US citizen living in Germany earns 100K, Germany tax is 30%. The US tax rate is 20%, 24%. So in this case, what happened? You paid more taxes in Germany. So you will get entire, I mean, you are not going to pay any taxes in US on this one, because 100K into 24% means you will get you paid almost 30K there in Germany. You are going to pay on this 100K in USA only 24K, 24,000. You mean you will get entire FTC. The only drawback is you are paying additional 6% in Germany on account of this one. It is not a double taxation. You are paying overall 30%. You paid overall 30% in Germany, but the same to the extent of 20%, since your US tax rates is 20%, you are getting a FTC, foreign tax credit. In your 1040 return, there is a concept of, there were so many credits. I mean, Tesla credit, FTC credit, research and development credit. It is one of the foreign tax credit, which IRS allow you to claim this one. Yeah. So it reduces your tax level. Yeah. Okay. 1 minute. Go to 547.
Is there
This
any
is one more.
Sunil,
Yeah.
is there any refund chance?
Okay. Refund. Okay. This is a good question. FTC, refund of FTC. So, yeah, I would like to two things here. Suppose refund in the sense, we will talk about refund in the other country, refund in the US also. Okay. Suppose, suppose you paid 30% taxes in Germany. You filed return there. You got entire amount refund, assume. You got entire amount refund from Germany. Then you will not eligible for FTC at all. Foreign tax credit. This amount. The reason you paid zero tax there, when you claim a refund. So many people, what happens? This is where I have seen many cases. What happens in India? What happens based on they will file the return, because if the income is below 2 lakhs or something, they'll file the return. They deducted interest. The banker will deduct some TDS on their interest amount. When they file India tax return, they'll claim back that refund. But what happens when they file 1040 return, based on 26 AS, they are trying to get the refund back. You are claiming refund in India by filing the return stating my income is below limit. It means you not paid any taxes in India ideally. You got entire, you have taken entire amount refund back. But whereas in your 1040 return, you are showing I have paid TDS on my bank interest. They are taking based on 26 years, they will give some form 16A. Based on the 16A, they will file the return. But the purpose is deviating here. It is mainly, this is called concealment of income. There you again claiming a FTC, foreign tax credit. So that is where I think we should be very cautious on this one. And the other point, Mahesh, I think if your FTC, if you paid more foreign tax credit, also any credit, even child tax credit, FTC, research and development credit, all these things will get a refund in case if you owes less than the what is the FTC.
Yeah.
Yeah. Go to next slide. But be careful on when you are
Yeah,
claiming
you
a
include 1 minute. You include that also in this slide. You do modification.
yeah. So very careful. I think why that is why I want to be very careful on this filing 1040 filings. When you are filed a refund in your India tax return, do not claim FTC here. That is very important.
Yeah.
Okay.
Sunil, we got 10 more minutes because it's 1 hour presentation, and then
Oh,
take
sorry.
yeah, not a problem.
Okay.
Just
Only this one, 547. Then we'll talk about only. I will close this one. Yeah.
yeah,
So
yeah.
this
Please.
is
10 more
This
minutes,
is
and then we can take questions. Yeah, please.
oh, very good. Okay. I will speed up. Okay. Okay. You will park all your questions also. Maybe we'll see later. Yeah. This is also 547. This is information reporting to IRS. See, earlier we talked about this EBOR, FATCA. And what is this 547? 547 means what? Having holding in any foreign corporation, in foreign country. Suppose you have a TCS or any other your own startup company. Your friend started one company in India. You start as a director. You invested some percentage. You own some value of shares. Then you need to report 547. This is because you have a financial interest. You have a beneficial interest. You have a signing authority. You have authority to attend board meeting. You have authority to take decision. You are controlling that company by having a voting rights. Then you need to file this 547. Go to next slide. Yeah. This is also very okay. I gave you holding concepts also. See, various scenarios of holding. One, as a director, at least 10%, or at any time, you have more than 50% at any time during the year. These are various scenarios are there. As a US shareholder, if you are having this holding in any of your foreign company, you need to report, you need to file this 5471. The reason is, what is this 547 reporting means? It is information return. You are going to report all that company financial information, P&L account, balance sheet, everything in your 1040 return. That is very important. 5471 means that company has to finalize. What happens if you are holding any 10% or 50% in other foreign companies? When that company will close their books, it will take March or sometimes September also. So you need to get audited financial from the foreign corporation. That data you need to file in your 1040 return. So when you have that kind of holding, you should go for extension. Otherwise, we cannot able to report proper reporting. So this is very, very important in this case. So go to next slide. Yeah, control. Yeah. See, that is what I am going to. The form requires detailed information. Your income statement, balance sheet of a corporation, stock ownership information, and what is the transaction between the US shareholder and foreign corporation. Any transaction has been taken place as a shareholder. Sometimes what happens, why this information is important? To calculate tax on arm's length price. People, what happens as a shareholders, you will do transaction with your related parties. then why you do, if you sell something to the other foreign corporation, you take a lower price. Why this will take place? To reduce the tax burden. So that is why transactions between the US shareholders and foreign corporations also to be reportable here. If you take any salary from the foreign corporation, or if you does any services, if you any loan or everything, these are all need to be reportable here. Yeah. Okay. Yeah. Okay. See, 547 also the penalties. Penalty 10K per year. Additional penalties also there up to 50K. So, and again, there is a criminal proceedings for willful violation. I suppose IRS may ask some further notice. Why it is not declared? We need to produce the substantial reason. You cannot say I am not aware of that. Loss and everything. You need to provide a reasonable, substantial explanation. Yeah. Go to next slide. Yeah. Last time. How to avoid finances? So that is why you need to be accurate financial data. Take help of the professional help in this case. Stay updated with the foreign corporation changes frequently. What is happening? These things. Okay, go back next slide. Yeah. Okay, so I'm going to talk about one point on this one, and I will close this one. 15 CSCBA. Why it is very important? Also, I will tell you. Recently, I think you may know, you have been transferring funds. You are repatriating funds from India to USA. Funds means maybe if you sell you may sell the property, or you may be get, especially why I'm going to talk about even your own intra-bank accounts. You have NRO account, you have NRE account. Even if you transfer funds from NRO to NRE account, this 15 CBN now it is mandatory. If your for transfer of funds exceeds the 5 lakhs, this is the earlier you can transfer at any amount of whatever the amount you feel. You can just, banker does not say why you are transferring, what is the purpose, how these funds are derived. But now, especially the new RBI guidelines, the new FEMA compliance, they put a stringent control over this one. If any during the year, even from NRO account, if you transfer funds to NRE account or US account, if it exceeds the amount of 5 lakhs, Indian rupees, then you need a certificate from a chartered accountant also, 15 CB. They have to certify. I think maybe it was there, people recently, they have been suffering so many for this. They're unable to repatriate funds beyond 5 lakhs. I think it is a prosper from the last 1-2 months. I think 1 month onwards, people are suffering for this one. There is so where we need to certify. For example, if you want to transfer 1 crore funds, the 1 crore fund, you need to provide a detailed information to the banker. From where you got this 1 crore fund? Has this been gifted by someone? Has been the sale of any property? If the sale of property happened, was it reported in Indian income tax? All these questions are there. Whether TDS is properly deducted or not, whether tax is paid or not. Earlier, there is no such stringent condition for transfer of NRO to NR. You can freely transfer funds. But now they put this punitive action on this one. So that is why this, even if you see, go to next slides, there will be penalties for non-filing of 15 CSCB also, mandatory. Go to next slides, yeah. Track, see, if it exceeds 6 lakhs, there were again, when it is, you need to definitely should be certified by a CA accountant, because or assessing officer, income tax officer, either one has to certify when you are transferring beyond 5 lakh. So just probably if you are maybe somebody could have been already struggled for painful process during this time for anybody. So if anybody need help on this one, we are ready to help by providing this kind of certification also. because just you can check with your banker also. Even in case if you are able to transfer beyond 5 lakhs freely from your own NRO account to NRO account, then you are very fortunate because maybe the software is not updated properly. That could be the scenario, maybe. But definitely there is a stringent RBI guidelines and FEMA compliance. Even Indian Income Tax Act also very clear on this one. These 3 acts.
Yeah, this is the
So
specialty in case actually. So we
yeah,
have India and US and UK.
true.
Different
Even
tax are there, no? That's why.
yeah. Go to next slides. Yeah, yeah. So yeah, this is the certification required applicable tax rates. Yeah. Okay. Go back. Yeah. A correct TDS calculation, all things we need to, the auditor has to certify. Come to next slides. Yeah, maybe I'm going to end. Yeah. This is all regarding 15 years CPT. Then when it is exempted, penalty also you see very stringent penalty, 1 lakh something. so almost we expired it, I think, in the last one. So probably I would like to give chance for more yeah, audience questions. I have taken beyond stipulated for time. Sorry for that one.
No, I think you are on time, Sunil Garu. We are good. We got a couple questions in the chart also, correct?
Yeah. Just to go. Yeah.
Yeah, we can see
Yeah.
those questions from
Yeah.
the Q&A session. Yeah. Yeah, please proceed.
Srikanth Kumar.
Maybe.
What is the minimum amount of interest that have to be reported from a fixed account?
Sorry, what is the question? Yeah.
What is the minimum amount of interest that have been reported from a fixed account?
Okay. This is interest. Okay. The interest is the income. Interest is the income kind of thing. So regardless of value, whatever the income is you received outside USA, you need to report in your 1040 as an income. This is a foreign earned income. So when it's suppose if your value is, if it is more than 10K, the fixed deposit value is greater than $10,000, then it will then you need to report even the FinCEN also. If it is exceeds 50,000 value, then you need to report EBOR also. So you have to report both FinCEN, EBOR, and as well as interest income in your 1040 return as a foreign earned income, regardless of value. So whatever the value it is, even it is I think a $10 or something, you still need to take as a, because it is a worldwide income, it is a global income. We need to take into the consideration. Yeah.
Yeah, one more question. We file a taxes in India after 31st March. If I have income 10 lakhs in December and 20 lakhs in Jan 2012, aggregate this amount is reported in Indian taxes after 31st March and pay the tax. As per the US tax reporting, do we report all these in 2024 tax returns or 2024? They are asking timing.
Okay. This is a very good question. So here two things. So generally what happens, India will follow the financial year, April to March. So in this, whereas the IRS follows the calendar year. There were two things. Generally, precisely speaking, you need to report on a calendar year basis. In this case, your 10 lakh in December 24. It means during the calendar year. Again, if you see the meaning above calendar year, it says not financial year, which means what? You need to take only 20 lakhs income. That is what you generated Jan to December. While you are filing your 1040 return for the year 2024, you need to 20 lakhs. So, I mean the 10 lakhs. Whereas the 20 lakhs which you received in Jan 2025, it means you are going in your 1040 return, you are going to file in 26. So precisely we need to bifurcate your revenue also. Even 5471 also. Your financials based on April to March, when you are filing 5471. But auditor has to give calendar financials also in that case. That is why 5471, why I am gathering precise information, very, very important. That is one more headache for the auditors. They will give Jan to April to March. Nobody will give to Jan to December. But for a foreign shareholder, he need the financial data Jan to December for the reporting purpose. This is again a painful point. You need to get financials Jan to December, audited financial. Whereas this interest income is very easy. My form 26A or my form 16A, very explicitly you will get all your precise data. So
Yeah,
my
yeah. His intention is actually the aggregate of 10,000.
Yeah.
Do we need to take Indian calendar like April to March, or that's their question actually?
Jan to
because
December.
As per India, it is 1 year only. In December and in January, it is 2 years as per your US.
Yeah.
Their question
so
is,
you
it
need
is as per India.
need
Which
to
one is taking? As per India or as per US calendar year?
You need to take as per US calendar year. What is the income you generated as per US calendar year? So you need to separate the data. Jan to December, what is the interest earned in your bank statement? What is the amount there in 26 years? You will get the data also. Basically, you are going to divide 2 financial years of data from your Indian income tax data. And again, you need not to wait for India tax return filing. Because whatever income generated in 2025, you need to go and report in the 26th of your 1040. So you just merely go a consistent calendar year. Yeah, hello.
Yeah,
please.
Yeah. Okay, next we'll go to next question. One more.
Srikanth, if you have any question, you can put it
again. One more. I think I have one more question also. If I own a property in India and if I gain should file you need to file Schedule E report. Yeah, we need to report in Schedule E. We need to, you ought to report. And if I pay it, then you can claim finance credit. That
exactly. Also one question, sir. Okay.
Yeah. So if any, that is what very important. If you have any property in India, if that property generated rental income, and if you paid any taxes on that rental income, you can still need to report in your Schedule E of your 1040 return. And if any taxes paid in your tax return, you can get a FTC on that one. That is mandatory. But this asset, as you are earning the income from land and building, this land and building value need not to be reportable under your FBAR. Sorry, on FATCA. That is only one relaxation. But you should report to your rental income. Because what happens, if you won't report what is the concept, over a period of time, you need to, at any point of time, you will decide to sell your property in India. You need to repatriate that fund back to the USA by offering a capital gain. Then IRS knows. So you have a sold property from India, why you have not reported this rental income? These kind of red flag items to IRS. Yeah. Any next question?
Yeah, if anyone want to ask questions, please unmute and let's.
Probably, I think I can. They can feel to send their queries to our email even.
Yeah, email is also fine,
one more question.
Mm-hmm.
You have capital gain in India. You pay taxes there. When I report it as income, so they have one question. If you have capital gain in India,
right? Yeah.
And you pay taxes there. When I report it as income in this, will it be treated as separate income or included in the total income and increase the tax bracket? They are asking tax calculation.
Okay. So generally, in India, there were two kinds of rates: short-term and long-term capital gain. So the short-term capital gain, depending of the holding period, it will be 10% and long-term 15%, some are 20% overall. When it comes to USA also, IRS also, the capital gain rates almost are same rates. If you see, there's no much difference. The maximum capital gain tax rate in IRS is 20%. The maximum. I think depending upon the actually, I prepared the topic also, but there were depending upon your threshold, your income limit, whether it rates also differ. Your capital gain tax rates also. It in the range of 15 to 20%. So if you paid any taxes on that capital gain in India, you still get a foreign tax credit. If you pay 20% in India, you can claim that refund, provided you should not get refund by filing India tax return on that capital gain.
Here they're asking aggregate related. If they pay taxes in India, assume capital gain they paid, that capital gain is included in US. So while
Right.
calculating US tax slab, is it included or not? That is the question.
They
That's
need to
only-
include. They have to include. Yeah, they have to include, because that is what now they are they are paying double taxation on account of this one. They pay taxes in India. Again, they are going to disclose. They are going to disclose in 1040, which is a double taxation. That is
So-
why you can claim.
Because
So
of
the
this
question
India-
is, sorry. The question is, I have some property that I've sold in India and I've
Oh.
paid long-term capital gains there.
Yeah.
Now when I'm filing the taxes in the US. If I declare, I have to declare. I'm going to declare that I've sold property and this is the amount that I have received.
Right.
My question is, if I'm in a 24% tax bracket now, bringing that
Yeah.
capital gains in, will it increase my tax bracket from 24 to 30? Will I go into the next level is my question.
Okay.
that is yes.
The maximum is 20% in USA. So you will get entire. Now you are not going to pay any taxes in USA by claiming this FTC. You paid already 24% in India now.
Right.
24%. So here the maximum rate bracket is 20% in USA. So you already paid 24%. There would be no additional taxes will be payable in USA in 1040.
Okay.
It completely offset. Yeah, it completely offset.
Thank you.
Slab
Yeah.
will not increase, na? Sunil, she's
The
asking
max,
slab.
the maximum slab rate long-term capital gain is 24%, 20% in USA.
Okay.
Yeah.
Okay.
That basically doesn't increase the tax bracket for me for my personal income.
Right, exactly. It does not fall under ordinary income. It is still a capital gain.
Okay.
The
Thank you.
nature,
What
the
about
nature of
short term, Sunil Garu, if it is a short term, it's supposed to be comes under the
ordinary income. Ordinary income. Ordinary
It is
income.
long term
Always.
more than 1 year, correct?
Yeah, more than 1 year, the holding period. Yeah. The
If it is
definition is
short-
remains there.
Sunil, if it is short term, it may
Yeah.
include in the main, then slab will increase, na? Am I right?
Exactly. The slab rates, similar to our Indian slab rates. It falls under ordinary income.
Yes,
Ordinary income means if your income is beyond, assume if you half million, then you will go to somewhere 45% tax rate. All your again, your state tax rates also 50%. Sorry, if I add a state and country federal tax rates, we are going to pay 50%. Yeah. Okay. Can we?
Yeah, there is
Then
another
it is
question.
lost to the taxpayer, na?
Okay. Can we report the loss from the profit and loss farming? Okay. This is a very important thing. Actually, okay. If you this farming, if it is if your active income, we should be careful on this one. Whether are you doing active income or as a passive income? If it is a active income, yes, you can claim these losses. If it is a passive income, and then we cannot offset with your AGA. You cannot offset if it is a passive loss, provided it should be active loss. Active loss in the sense you are actively engaging, you are participating in the beyond material hours, all these things. Then you can invoke these losses. in your AGI. Yes, passive losses can offset with your passive income only. For example, rental income. The rental loss is a passive loss. So many people, I think this is very important. I would like to highlight. People, I think I have seen many, I think some people, I think purposefully the rental losses they're claiming as active losses. The rental losses, your rental loss, whatever you reported on Schedule E, all your income from a rental property, which is obviously it is a your passive loss. You are claiming interest on mortgage, depreciation, all other repairs, and you are showing more. I think at any point of time, IRS will be very serious on this one, on these fraudulent things. What they were going to do, they are showing as active, and they are claiming they are reducing their from AGI, and they are lowering the tax and they are paying lesser taxes. So, but this is very, very important. There is a separate form also, passive limitation rules also there. You cannot claim, you cannot, if suppose if anybody somebody preparer, they want to encourage you such kind of things, do not accept this kind of things, because tomorrow you will be in trouble. The person, they are not in trouble because you are going to accept the return. So never claim your passive losses against your ordinary income. Be careful on this one.
Okay.
Yeah.
There is
Yeah.
one more question
The-
we answered about rental income is greater than 10K.
Yeah. If rental
Sorry.
income is greater than 10K, then only should I report?
Okay. Rental income, normal global. So your rental income is greater than 10K. So it means it is completely, you need to file your 8582. Okay, that is the limitation rules. Greater than 10, then only should I report? No, not like that. Regardless of limit, you need to report. Even if you 5K also rental income, you need to report.
Yeah, one more question they are asking. How IRS know about assets in India? Because you are in this. How they know?
Okay.
Is there any link between India and?
Okay, this is very, very important. So that is why previously the data, I think you cannot able to see. Now it is publicly, I think if you see your bank information, even if you do, if in India, if you do any significant transaction, the income tax department knows. This is a kind of that is why 15 CSCP, why they have recently, why they put that punitive action to know these kind of things. To transfer funds beyond 5 lakhs, they are asking certification, CS certification. It means the auditor has to certify how you got this amount, how it is generated, all these things. Again, it will reflect into RBI, the bank data. RBI has to share this data with the US Treasury Department. So there were so many links are there to share this information. So do not be under the impression that never be caught. I think at any point of time, it will be open to anybody. Very cautious on this one. Because if later if IRS come to know this kind of things, you are seeing penalties. Forget about tax savings, all these things. Whatever you are earned, it vanish your penalties. That is very, very important.
And
So
go ahead, please complete, and I will ask question.
Yeah. Okay. So that is why I think you be careful on your filings and provide accurate and precise information. And just if you want to know about more your returns, ask your preparation team why you have taken, how you got this information. Be vigilant, be knowledge on your return. Yeah.
One more question. Do we need to declare the lands got from foreign sister?
So this is actually, this is not part of 8938, not part of pension. So it is not a financial asset data. So it is not includable. But only thing, There is again one more form is there, gift. I think ancestral, if you got from ancestral, from the ancestor, there is a one form 35203520. That is the one information written we need to find for that one. That is separate return, but not part of FinCEN, not part of what call this thing. That is a completely. So I thought of FIFIC, some again 8938 to so many forms I thought of discussing, but 8621 foreign partnership 8865. I thought of to discuss all the and 8621 PFIC investments. But the next session, I would like to talk about more on these scenarios, on these forms. Even gift tax also, I would like to talk about more on that one in upcoming sessions. Because what happens, people would like to transfer, if they want to buy some property in USA, their parents would like to transfer some funds. That would be sometimes in crores. So what is the treatment in India? What is the treatment in USA? Those things are very important. So yeah, giving gifts is taxable in USA. Yes, I think there is again certain limits are there. Probably I will talk more about on that one, the gift one. Yeah.
Yeah, that's really
Yeah,
good
yeah,
information.
yeah, yeah.
One question from my side is, if I missed to file,
Ah,
for example, for a
ah,
couple years, the mutual funds or whatever the returns are, rental income and all, I
ah,
missed from some years and I want to file this year. How
yeah.
to how to deal that?
Okay. Yeah, that is a good question. So generally, you need to amend the return. IRS says you need to file 1040X. Obviously, even if you missed to file 89 FATCA, you exceeded 50K, you have missed to file, you have to file it, amended return. You need to file 1040X and disclose the correct return. Anything that is very important, Suresh has raised. Anyone in previous years, if there is any omissions, there is any concealments, I think it is better to file the correct return and pay the applicable interest on that one. As it would be, end up there would be very happy. I mean, it should be very, yeah, true and fair view financials, true and fair view return. Yeah. Yeah, we can, yeah.
So, for example, the mutual funds, if they are there and without redemption, they're just sitting there, we are not getting any amount from them, even though we need to report.
This is very, very important. Actually, mutual funds, the mutual funds ideally sitting, not generated any income. Generally, income is taxable when it is realized, the mutual funds. But sometimes if your mutual funds are PFIC in nature, passive foreign investment, in such a scenario, there is again a different clause. You need to, if it is a PFIC, you need to file 8621. You need to offer to tax on unrealized gain. Unrealized means mark to mark. It keep on changes your value. On the difference, suppose if your value is 20K now, assume next year it is 25K. The difference unrealized gain is a taxable. That is PFIC concept. It form 8, you need to report in 8621. Whereas if it is not a PFIC investment, it is my regular investment, my regular stocks, debentures, way of doing. Then it is not taxable. Then it is taxable only when it is realized, your mutual funds. In such cases. Yeah, so ensure, please check whether your investment is a PFIC investment or active investment. That is where you should be more vigilant. You should be cautious on that. Check whether your mutual funds are PFIC in nature, whether stocks PFIC in nature or active investment. Yeah.
Yeah, good. Thank you. And I
Yeah.
think a couple more questions in the chart. Can you please take a look?
Yeah.
Rental income.
Yeah,
is over.
rental
Yeah.
income is not an additional income. I think that looks like more of a comment than a question.
Yeah. Yeah. Okay. Yeah. Maybe our team members. Yes. Yeah.
Yeah, and
Yeah.
If anyone want to unmute and ask questions, please.
Yeah,
Actually, that was a question actually. The rental income, we can, you said that it's a passive income, it's not a,
exactly.
yeah. So do we need to file that as a Schedule E, or like, it's something like we need to call them in a different way?
No. It is always say Schedule E, because all you in Schedule E, I think even you need to report your address of the property also, from where the address is, where the property was there. Here, and again, one more cautious thing: if you are residing in one state, if your property is in one state, and if you are living in one state in USA, you have to pay taxes even for the other state also. Because your income is generating from other state. So your rental income always under Schedule E only. So there you need to, it is always a passive in nature. Again, the passive limitation rules will works out. You can future, if initially you are paying interest on the asset, you are paying even you are claiming depreciation. And one more thing I want to highlight you: if you are claiming depreciation on your rental income, in future if you sell this property, you cannot claim the cost value. The reason you claimed entire depreciation. This is one disadvantage if you claim depreciation your rental income. When you show a Schedule E, you are claiming my land and building value has to go up. Every year you are exhausting that amount also. So that is your choice, whether you want to be not to sell or held to intend to sell in future. If you intend to sell in future, then do not claim depreciation. But if you want to retain it permanently, then you claim it depreciation. Yeah, and one more thing also. Sometimes what happens, you got some losses, passive losses. Next year, what happens? These losses would carry forward. So sometimes people, what happens? They will switch over from one consultant to another consultant every year. They forget to report this carry forward losses, because if you are in the same tax preparation person, they have the carry forward losses. The software will trigger. But if you switch over, they will miss out this carry forward losses. Check your returns, whether your carry forward losses are there in your return or not. If you are not report the carry forward losses, future if you have a passive income, you cannot offset if you not declared carry forward losses. Be careful on this one. So that is why I was emphasizing, be knowledge on your return. Rather than a tax preparer, you should have more command control on your return. Yeah.
That's good. Anyone having questions, please unmute. Okay, I got one more question, Sunil Gar, in the meantime.
Yeah.
Someone is preparing. So, for example, if I am not having a PAN card or maybe Aadhaar, how to deal with the situation being in US?
Okay.
Filing
So
part.
yeah, generally, I think PAN card, if it is not there in PAN card, okay. Aadhaar card, okay. That is a different scenario. So even if you do not have a Aadhaar card, can still be file the return. If you do not have a PAN card, means generally you do not have a bank account in India. The reason, the banker, it is a KYC form. Banker without PAN card, the bank accounts it become inoperative. You cannot do any transaction in India. So it is a mandatory PAN card. Even your Aadhaar card, even you can file without Aadhaar card also written, stating I am US citizen, those can putting those compliances. But PAN card is mandatory. Yeah.
We can apply being in US also for PAN card?
PAN card we can apply, but you cannot apply for Aadhaar card. You need to fingerprint all these things. You can apply for PAN card being in US also. That is possible.
Okay.
Aadhaar card, not possible. Fingerprint button.
Yeah, that's good information.
Uh, yeah.
No, if they came to India, then they can apply. No, that's the question.
Then that is possible. Yeah, the
Yeah,
fingerprint.
that's-
But that is why if you are residing there, not possible. But that is the
if they
only
came
thing.
if they came
Yeah.
to India, then that time they are asking.
Yeah, they can produce their address and everything. Yeah, because we
Also,
need
they're
to.
asking to give the Aadhaar in India, how many days they need to stay. That's also. Is there any one day they can stay and they can apply? That is the question.
See, generally this Aadhaar card, all these things, it is a kind of a mainly people in India, it is a social security benefit kind of thing. People try to get their benefit point of view. Generally, for a person who is a legal resident of USA, they don't need Aadhaar card at all.
So
The only
if any transfer of assets and all properties required in India.
okay.
Registration.
Okay. In that scenario, the purpose is there. You need to transfer sale of this asset. You need to transfer your land and building. Then you can come and apply for this one.
As
Aadhaar
per
card.
my knowledge, there is no restriction of how many days you need to stay in India.
True. If the purpose is there, yeah. Because
Yeah.
being you are as a citizen of India, you can apply.
Yeah,
There is no-
all you need to go and give the fingerprints and photograph, and that will send
True.
it to your home.
Yeah.
I think you don't need to be stay there for getting
Exactly.
Sir, one more question regarding the gift thing actually. So if my mother sell the property and give the money to me, like how much money I can bring, like with me if I have two kids, so total of four people, how much money I can bring?
I think there no limit. You can transfer entire amount. Since the blood coming from mother
Mm.
in India there is not a taxable. Even there is in US also there is annual gift exclusion is there limit. So the annual gift to exclusion around I think 50K something is there. Maybe I'm not correct about that figure. One time you can exclude annual gift exclusion. That one. Maybe I will send you that information. How much limit also?
Yeah, you
If
note
it
it
is-
down, we will
Yeah.
put it out.
Yeah, I will send you that limit in US limit. But in India, there is no limit. We can transfer regardless of limit. Yeah.
Yeah, please mention is as per person or like a family. I think that
Maybe 30 million, somebody. Yeah, lifetime. Yeah, we have. Yeah, I would maybe I will cover one session on gift. We'll talk about because
Yeah,
what
planning
happens.
of gift,
Yeah.
how to transfer gift and all. That's the planning. Tax planning.
Yeah, that is one part of tax planning. But India, no issue. But we need to see IRS also. The lifetime exclusion is there. Those scenarios are there. And there is some return also, even especially the 3520, 352A. You need to show that information return.
Yeah.
When you got that transfers, gift transfers.
Yeah,
Again,
we can
all this.
You can cover separately, gift related.
Yeah. Probably next Saturday we can take on this next session, probably continuously. Yeah.
We can continue the sessions every week, not a problem.
Yeah.
I think we are half an hour after the meeting time also, but still, if anyone having a question, want to unmute and ask the question, please utilize this time, or you can even send an email to help at globalfintax.com. And if anyone
you can.
has tax filing requirements with all these complications about foreign income, all those things, please fill this form, and our tax experts will reach out to you for all these tax filing requirements.
Yeah, I think we received notice 3 years back. Can we aware that there possibility of overcome that? Yeah, we can still file. So if this notice 3 years back return, online filing is there. Yeah, up to 3 years we can file online. Beyond 3 years, we have to file offline also. Yeah. Yeah. Yeah, beyond 3 years. Yeah. Yeah. Only IRS opens only up to the last 3 years only. Beyond that one, we have to file paper file. Generally, one more thing also. Once IRS asks sending notices any beyond 3 years, there is no filing again. We need to close the issue through notices one. Even you should have a login account also. Through login account, we can address all IRS queries also. They will start asking you all. This is called e-assessment proceedings kind of thing. So if your return is not correct, if you missed something, then IRS will send a notice stating, so you missed out this information. We got this information. You need to reply. So then they will go based on your documentation provided, based on your comments. They will again reassess. Again, no filing at all. They will not accept filing beyond 3 years. We need to close through notices only, the return, all issues. Even we can talk to IRS. I think they will answer. I think we can close issues easily. If you have, that is why please ensure we have online account, IRS online account, because that is very easy to reach IRS also for any notices, for any correspondence, even for submission of documents, everything, even your tax paid information, everything updated in your IRS online account. Yeah, if you are not at all created so far, please try to create that file. Yeah.
Yep, I
Yeah.
think we are almost good. And if anyone having last moment questions, please chime in. Otherwise, we can conclude.
Yeah,
How
last
can you
question.
okay, after cross the bracket, know the standard savings of 400 comparing other than this, do you recommend anything additional? Six? Okay. Okay, this is a good thing. See, generally, one question, one thing I would like to highlight. Generally, what happened earlier before this tax cut job act, I think there were so many itemized deductions, which is people are started to claiming that. Itemized deduction means the people they would like to claim travel from the office to home, all these things, so many expenditure. So they are finding IRS finding very difficulty to see they notice so many fraudulent transactions. Purposeful IRS what did they increase their standard deduction. They are almost for a married filing entity they increase it up to 28K. You cannot claim more than this one. Anyone, if you want to go beyond 28K, you need to have a lot of 2-3 houses, mortgage interest. That is only we have to give a lot of donations. So IRS is that is why they increased the deductions also. Even they started giving Tesla credit, child tax credit, the 401K, all these things. The other way of, I mean, if you want to save some taxes on your return kind of things, one is maybe you can start one LLC, maybe you can divert your income. That is one way, because there you can reduce, you can take some expenses against your business income. That is one way of diverting income and saving your taxes. So from W2, you can now, other than this common child tax credit, Tesla credit, again 401K, IRA. So beyond this one, it's very tough to save that one. I mean, there will be still saving some $4,000, $5,000. That's all. Yeah.
Okay. I think that's really good information, and it's time
Yeah.
to conclude. Yeah, thank you, Sunil Garu and Mahesh
Yeah.
Garu, Global
Yeah.
FinTech team, all the information. And if anyone having tax-related queries, or if you want to
Yeah.
file taxes, please reach out.
Suresh,
Contact.
I want to add
Yeah.
something.
Please, please.
Yeah, go ahead, Mahesh. Yeah.
Yeah, actually, the session feedback we need from those who attended, because it will encourage to us to modify and to do more sessions like this.
Yeah, sure,
Those
sure.
who attended, you give the feedback, and if you like, if you refer more to.
Yeah, if any other topics to be covered also, please send an email to help@global-fintax.com so that we can plan next sessions based on your request.
Exactly. Yeah, based on whatever they prefer.
Feedback is
Yeah,
important. Feedback is
yeah,
important.
yeah. We'll take based on your inputs. Yeah, the next session also. Yeah,
Good. Thank you.
yeah, yeah. Thank you. Thank you all. Yeah. Bye. Bye.
Bye.
Thank you, sir. Thank you.
Yeah.
Thank you, sir.
Bye.
Yeah, thank you. Thank you.
Yeah.